Hey everybody, it's Jon Grauman here from the Grauman Rosenfeld Group at the agency with a market update. At least I'm going to try to give you a market update in this crazy, ever-changing market that seems to be unfolding every single day. And to that end, I'm actually going to timestamp it this time. It is Friday, April 11th, because God knows the market could look very different tomorrow or the day after that. So let's try to talk about this for a moment. Again, we find ourselves in what is arguably one of the most turbulent, tumultuous markets we've ever seen, and I'm going to try not to get political in this conversation. So whether you think Trump is playing a game of chicken with Powell to try to lower interest rates, or whether he's manipulating the bond market to try to set up the debt that needs to be refinanced later this year, nearly $8 trillion worth, I'm going to try to keep the conversation focused on how is this impacting the real estate market. So let's talk about the bond market for a moment, and specifically the 10-year Treasury yield, because that is really the key indicator. So the 10-year Treasury yield, if you don't know, is the rate at which the government can borrow money. And in the last week, we've seen it go from as low as 3.9 to as high as 4.5%. Now, long-term mortgage interest rates are also tied to the 10-year Treasury yield, which is why in the last week, you were probably getting emails from mortgage brokers saying interest rates have come down. And this week, you're probably seeing interest rates are above 7%. That is, again, the fluctuation between 3.9 to 4.5%. So that's going to be a key indicator here, and I really do think the primary objective is to try to get that down in anticipation of having to refinance nearly $8 trillion worth of debt in the next 12 months. The other key factor here is what's happening to home values. Is this affecting home values? Well, in theory, it shouldn't. And what I mean by that is that once we get through this, once we're on the other side of this, whatever this is and whatever that's going to look like, once on the other side of it, it really shouldn't impact the basic fundamentals of supply and demand as it relates to the housing stock in LA or any other market for that matter. It shouldn't. Doesn't mean that it won't. Right? There are two things that really drive the market, either fear or greed. And the reality is the market is in a very fearful place right now. And fear is an emotion. And you are not going to overcome an emotion like that with facts, logic, and reason. You're simply not. So people are going to make emotional decisions during this time, and you may see some properties trade for less, but ultimately I think those values are going to sustain once we get on the other side of it. So again, it is a very uncertain time, and a lot of people are pulling back, but this reminds me, it's sort of eerily similar to what I remember like Q1 of 2020 looking like as we were going into COVID. And looking back on that now with some perspective and a level head, you know what I wish I would have done more back then? Bought real estate, because the values only went up after there. So nobody knows where this is going. Candidly, myself included, I would love to hear your thoughts, your comments. Please make them below, and if there's anything else you want me to address, just say the word. Thanks for watching.